Hey, how y'all doing? So let's get into this review. We're going to start with GBP/USD. And so I had a couple trades on this. I had one from London and then I had one from New York. All right, so we're going to start with London, of course. So the very first thing that I established on GBP/USD was, well, we can see the daily chart. It's in that upswing right now. It's bullish, right? We had that really strong expansion. And I know my chart kind of looks a little bit cluttered because I got these, all these levels on here. But just look right here with this big bullish expansion yesterday on Wednesday. Had like that really strong close, right? And each candle tells you a story. Each candle it gives you an indication of what like think of it like it sets the intention for the day going forward, right? We have this happening. We have this inverse fair value gap created right here. And I understand, okay, it wants to do what? It wants to seek that opposing buy side. It wants to seek that opposing imbalance up above because that's the next draw. Since it didn't respect that as a level of resistance, then that means what? It's going to want to seek the buy side up above, which it does, right? You go to this 4-hour chart and you can see this thing, it's already in a deep premium. Like, look at that huge ramp up right there. Look at that massive ramp up on Wednesday that we were just talking about, that really strong expansion. So yeah, it's got a really strong expansion, but it's also in a premium marketplace, of course. It's taking out significant higher time frame buy side, and it's coming up into a weekly bullish imbalance. Because if you were to zoom out to this weekly chart right here, and you were to look at that weekly chart, well, guess what? That push up is taking out previous week's highs. That push up is coming up into a weekly bearish imbalance. That's a heck of a lot of liquidity. That's a heck of a lot of liquidity that you're coming up into right there, already in an extremely deep premium marketplace that you're pressing up into that. So let's go to the lower time frame. We're coming into London here, all right? And what do we see happen? First things first. Well, we push up. Okay, why is this important? Well, because I want you to notice what we're taking out. We've already established that we're in a deep premium, and we've already established that it probably wants to draw to that imbalance up there on the weekly chart, previous week's highs, etc. That's where it wants to go, and it's ramping up and it's doing that. First things first, it's doing that. So it's making a new high day here. It's already cleaned out previous day's highs. It's already cleaned out Asian session highs. That liquidity is done with. Deep premium, weekly imbalance, weekly liquidity, while having Asian session lows intact. Now, that's not a profit target for me, but I like having that liquidity there. I like having that liquidity untapped because then it's able to serve as a draw later on, right? Not right now, but later on, okay? So what happens here is, okay, we have this right here. What's this? Well, that's low of day sell side. Low of day is a key liquidity pool as well that you need to be aware of. So that is, very commonly what I shoot for profit targets. Not always. Sometimes it'll be inefficiencies, of course. It'll be fair value gaps in, discount premium marketplace. But I have this low day sell side right here, and I have this thing, it's pushing up and it's coming up into this big imbalance right here, right? And then you can see it comes down and it gives a shift. Where's that at? Now, it's not the most explosive by any means, but we come up, we get that 3 o'clock sweep, we come up into that weekly resistance. And then you can see it comes down right here, and you can see we got a fair value gap. No, we don't got one right there, but we got one right here. See this? And then we got that close right there. It's not a very big displacement, I understand, but it qualifies. So I have this shift right here. I have that close right there. And at that point, this becomes my draw. It's that simple. At that point, this becomes my draw because I've taken previous day's highs. I've taken Asian session highs. I have that weak liquidity taken. I have the higher time frame imbalance taken. Now, it's still bullish market structure completely, but guess what? That sell side liquidity is going to be residing somewhere. Where's it going to be residing? It's going to be residing underneath a support. So then I ask myself this question: where is the next level of support? Key level support, low of day right there. That's a draw. It's that simple. After you get that change in trend, that's my next draw. That there's sell side residing there. Okay. That's what I want to target. Now you might see it's like, oh, well, boom, you got paid, right? Actually, I did bail out of this was a small L. And the reason for that, and I'll explain why. As per my rules, if I'm executing on a 5-minute chart, then I have to bail by 8 o'clock. Okay, that's part of my rules. I bail by 8 o'clock, no matter what. And the thing is, like, we were coming to that last hour here, and it really wasn't doing anything. It wasn't doing anything. It was just back and forth, really no direction. So I figured, okay, if it hasn't done it by now, it's probably not going to do it. An hour left, not a lot of time. And it's like a paper cut L here. So play good defense, cut it, done with. That's how I approached it. Now, I was correct on it. It did end up selling off and taking out this low here. And it actually did it even before 8 o'clock. So it did end up hitting the objective, but I'm not going to beat myself up over it, because a lot of times in a case like that, if it's got very little time like that, it usually doesn't have the best fault, like, because it wasn't doing anything. It was just back and forth. And, of course, like right after I get out of it, it wants to accelerate. That's typically how it goes, right? But it is what it is, guys. And yep, so that's what happened. And why did it push up now? Because you might be like, okay, but it was going to agent session lows down here, but it doesn't have to take that out right now. That's the thing. Price is going to gyrate from liquidity to liquidity. And remember, it's still bullish market structure at the time that it's doing this. So on the higher time frame, 1 hour and 4 hour, of course. So we come down, we take out the sell side. That's low base sell side, liquidity taken. It finds support off that liquidity, and it gives it, think of it like it gives it the necessary fuel to have the next move higher. It comes up and it takes out this buy side now. Okay, so we take out this buy side right here. It's making a new high day, but guess what? It's still in a deep premium. Guess what? It's pressing back up into that weekly bearish imbalance. It's still expensive coming into New York here. Now, of course, I let news, everything get done with. There was really no reaction from 8:30, which was when we were scheduled to have high impact news. And we still have agent session lows intact, which is a bonus. And then we're pushing up into this imbalance, and we come up into this right here. Look at that right there. What's that? Look at that little black box that popped up at the right of my chart. What's that right there? Well, that's what we call an institutional price level. 0, 20, 50, 80 are institutional price levels. We have an 80 institutional price level right there. We come up, we test that, boom, immediate rejection, comes down, strong close, fair value gap. That's a confirmed shift in market structure. Okay? So guess what? Once I get that shift, where's my draw going to be now? Where's it going to draw to next? Because we've already taken significant buys of liquidity. Remember, we made a new high day. Remember, we came up to that inefficiency. Remember, we tested that 80 institutional price level. Remember, we're in our premium. And we're in New York at this point, and it's already had its run, essentially. Well, I figured it was going to have the move down to these lows down here into this imbalance, but I want a low-hanging objective, okay? That's just how I want to approach it. So we had this push up right here, and this, this push low right here, it took out low day sell side, then it had that push up as we were talking about. So we have this dealing range right here. Okay, so what I did here was I measured this dealing range, okay? And we were to take our Fibonacci from this low to this high. There's liquidity in there because there's internal range liquidity down there in a discount marketplace. It's going to want to seek that internal range liquidity in a discount marketplace. Okay, because these are portions of price that was not efficiently delivered. That push up was too fast. It was too extreme. It was too explosive. It didn't have a chance to. And it's taken out this buy side. It's got this inbound. It's got a lot of resistance in here. And then we get that lower time frame confirmation, 5-minute shift. Now, the tide has changed. The momentum has completely shifted. And I can look down and see, okay, this is my next draw. That's my upcoming draw right there. I have this inefficiency. That's going to be that magnet for price next, since it now has that change in trend. The tide is now bearish right there. Shift. And then it even comes up into a premium right here. And then we come down into that low down below, and we rebalance that price action right there. As you can see, we come down into that. And you can see it does exceed it. And I'm not going to get, look at this and say, oh, there should be somebody that's going to be like, oh, Mike, you left so much money on the table. Look at that. Such a rookie move, right? Taking profits so quick. Nope. All this is outside of my plan. I came into this with the plan of, okay, I'm seeking internal range liquidity in a discount. It hit it. Done. I don't take it farther than that. I don't give a damn about all this stuff happening. That's just purely a hindsight issue. I mean, yeah, I did figure it was going to exceed it, but low-hanging objectives, they pay. Okay, singles, they pay. And I got to be out by 5 o'clock p.m. Eastern time. That's the end of New York. Okay? So that's the reason why I go with that objective, that low-hanging objective. Take my single, take my money, run. That's how I approach it. That's how I approach this. Okay? Now, into the USD. I had a break-even trade on this, and then I had a loss on this in New York. So we're going to go over both, of course. And my reasoning was correct on both of these plays. Which we're going to go into what happened there. So if my reason is correct, well, if you took a loss in your reasons, what do you mean by that, Mike? Well, we're going to go over that, right? So we have the higher time for perspective again. Like this thing's pushing up into a deep premium, right? I mean, you can see this thing, it's just going ballistic. It's going ballistic. It's taking out this massive higher time frame buy side, deep premium. Look how long this thing's been pushing up. We understand it's due for a reversal. It's just a matter of time before it's going to have that dump, which it's having right now. We understand that. So we're coming into London session. It's already in a deep premium. It's already expensive, and we're pushing up here. Okay, we can find midnight right here. So we're coming to a brand new day right here, and it immediately puts in low of day right here. What was I just saying with that GBP USD? Low of day is a key sell side liquidity pool. Okay, that's the absolute low that was traded today. And at the same exact area, you have a 1 hour fair value gap right here. Again, that is a draw. There's going to be a draw once you have that shift, right? Because in the meantime, like it's just pushing up. Like, because coming to a London session after 3 o'clock, we're just pushing up, pushing up, pushing up, pushing up, pushing up, pushing up. And then it's making new highs. It's very bullish, right? It's very bullish, but you can't forget, like it's in a deep premium. It's taking previous day's highs. It's taking Asian session highs. It's overall bullish, taking out massive higher time frame buy side. And then right here, I get a shift. I get an anticipated shift. It comes down. It cracks that low right there, right? Yep. It's the fair value gap, right? Yep. That's all the signatures for a shift. Now somebody may see this, oh, but you got stopped out right there, didn't you? Oh, your liquidity, Mike. Nope, I didn't. What do you mean you didn't, Mike? Well, my 10 pip roll saves me in that scenario. I got my entry at 37 on this. So if my entry is at 37, where's my stop going to be? It'll be 40. Now, it got very close to taking me. It did get very close to taking me, but my stop is up at 47 in this case. So it took out this high right here, and then, but nothing was invalidated is the key thing I want to get across here. Nothing was invalidated on this play. Nothing. It was literally just a stop run, and then it continued to my objective. I was completely correct on it. And my 10 pip roll, because there's somebody, what do you mean by 10 pip roll? Well, I need at least 10 pips. I don't go lower than 10 pips for a stop. It's that simple. And then if I don't have 10 pips from the entry, then I'll extend it. I'll add some pips above the high to allow for 10 pips. Okay, so I'll allow that breathing room above the high to allow for that wiggle room essentially. So that's what I did here. And that's why I wasn't able, like, that's why I wasn't taken out here. It comes up, it takes out that high. Now, the second one in New York, it got me in that case. But the thing is, I already had the appropriate stop, right? I didn't need to add it for that case because it only gave 10 pips. But on this case, I needed to add it. So it gave me that pullback here, and I went to target doesn't turn range liquidity. It came up and took that high, still in it, and then it comes down. And then when it came back down to my entry, I just got out break even because, I mean, it's coming up at 8 o'clock. I got to be out by 8 o'clock as per my rules. I'm not holding past 8 o'clock. And of course, I got high impact news coming at 8:30. So I figured, okay, that's my best plan of attack here is to just cut it break even, play good defense. And if it goes, it goes. I don't care, which it did. I mean, it came down, but really, I probably wouldn't have got a exit there because it really just tapped it on the pip. Even if I did hold it, it like literally tapped it on the pip. It didn't really dig too deep into that. And then just had a complete reversal after tapping into low day sell side into that imbalance. And it just, you can see, look how well it respected it because that's level of support. But then it comes back up, right? It comes back up, it takes out this high right here, runs that liquidity, boom. And you can see we get this shift. You see this? Get a nice big displacement here. We got that strong close, we got the fair value gap, all that good stuff. And at that point, now I was a little bit more aggressive, and I really unpacked this, and I looked at this, I studied this, and I was a little bit more aggressive with this than I usually am with my plays. And that actually, I mean, it cost me here. It's not really a bad setup or anything with how I approached this, because the thing is, I was shooting for this low right here, and I was correct on it. It did attack it. Like, I was completely correct that it wanted to take that out. It was just a timing issue. But usually, because if we were to look at this chart, right, the reason it had this push up was because it came down to this imbalance right here. You see this 15-minute imbalance? It found support off that, and that was gave it the necessary fuel to have one more trip up higher here. But a low-hanging objective, and an extra low-hanging objective that would be to simply take it down into this. Okay, because we got that 5-minute, like we got that shift right there, and it came down to imbalance. That's why I pushed up off that imbalance. But then this would have been a good target for like a extra low-hanging objective, right? This was valid, but this would have been a little bit, and this is why I like low-hanging objectives for this reason as well. So how would you approach that though? And again, I'm just kind of, studying this trade, seeing what, I could have done better on it, right? I had that low-hanging objective there. And if I'm targeting that, that's 35. You see that? It's 35 in that area, right? And then it pushes up here. So that means I would have to have my entry though. So I mean, I can understand, like, it's a pretty damn deep retracement. I'd have to get in at bare minimum at 45. You see that? I'd have to get in at 45 to allow for that. Because then I want to give at least 10 pips for a stop. So my stop would be up at 55. So you literally could just, get in, once it takes out this buy side right here, you could literally just short that buy side right there. And then just add that 10 pips to the top and then target this right here. That's something that's how you could approach it. Because the thing is, like, people, you got to understand this, like, that was confirmed. That's a shift, and it wasn't really invalidated. He just wanted to run those stops one last time before it had to move. Don't let that, go over your head. That was a very important detail. Nothing was really invalidated here. Nothing. He just wanted to run stops. So when you have that and you understand, okay, I got this low-hanging objective, you could literally get your entry near this top right here, which is what you would, what ICT would call turtle soup, of course. Take that high, and then you could add that 10 pips to the stop, and then target this low. Because you got to think like everybody keeps their stops at the same place, above old highs, above old lows. So like doing that, like that 10 pip rule that I have, I know that's unconventional. It's a very unconventional way of doing things, but guess what? 90% of traders lose. And I know it's not purely technical. It's mainly psychology that contributes to that, but also it's stuff like this too. Okay, you got to think about that. So it takes out this high and then it sells off and it attacks this. All right, it attacks that sell side, attacks that sell side. I was correct on it, but I did take an L right there. I was at liquidity, right? I was at liquidity on that second play right there. So it is what it is. Again, but that's just like my observation. That's my study from looking at that. That's how I could have done it better. That's absolutely how I could have done it better. And that's why I like low-hanging objectives like that. Like being picky with your entries and stuff, like it pays. It does pay. Being conservative with your profit target, it pays. This is a prime example of that. Okay? So that's why I like being as conservative as I can with these PTs. And that's how you could have approached it. Right? Now, this is another prime example of that. Because somebody may look at this, but well, you got stopped out right here, took out this high. So here's the deal. AUD, it pushed up here into New York session. Like this thing's, it's in a deep premium, guys. Like this thing is like, it's just so strong. It's ripping up. It's going ballistic right here. It's just taking out these highs. It's going up into this higher time frame imbalance. It's a deep premium marketplace. And I understand it's going to have that reversal here soon. It's just a matter of when it's going to do it. All right. So I see it pushing up here. And then we have this big leg up into New York session, takes out these highs right here. Deep premium, of course. And it's not the most explosive, but it had the confirmation. We had this strong close beneath this lower here. We had this fair value gap, and it's like right around the, buzzer beater around the end of 11 o'clock, but it's still valid within the kill zone. So I get my confirmation right there. And this is the same deal. So I wanted to target this sell side down below right here. It is also equal lows right there. This is the absolute low that was put in. It's New York lows. And it was absolute low before we got that push up, took it this high. So guess what? I understand there should be sell side residing beneath that level right there. It's why? Because it's a level of support. There's sell side residing beneath support. And I have this support right here put in and then taking out this high. So at this point, after I take out that high and I have the necessary liquidity, it's already in a deep premium marketplace. I get a shift. As soon as you get that shift right there, then that becomes your next draw. I have this draw down here. I have sell side right here. So that's what I want to seek. But again, guess what? 10 pip roll. I don't want to keep my stop above that high because it's not enough wiggle room. It's not enough wiggle room for this play because I need at least 10 pips. So no, I did not get stopped out when it pushed up and took out this high right here because I have that rule set in place. It protects me in that case. Because guess what? Same deal. Now really think about this. Nothing was like this is where we had this change in trend and nothing was invalidated here. This push up that you see right here was just a turtle soup to the upside to take that buy side, right? That's all it is. Nothing was invalidated. It's just a stop run scenario. That's all that is right there. It's a stop run scenario to take out these stops. It's ready to go lower. It wants a little bit more liquidity before it does it. That's it. And then it dumps. It's no coincidence. It dumps and it takes out the sell side. It seeks it, right? And then it comes down and does what? Well, it takes out low of day. Because we got that fair value up down there. And of course, it's already in a deep premium. So that's why we're seeing such a big move that we're seeing. It's in such a deep premium marketplace, right? So that was the case, guys. That's what we got on it. That's what played out. Now, USD CAD. Now, this thing was, I really like this chart. And I'll tell you why. It just had massive support. Like this thing was coming down and it didn't respect these levels originally. And it found support off that 4-hour imbalance, which we're going to go into. But we took out daily sell side right here. You see this? Where my cursor is? I noticed that this morning. All right, you had that big move yesterday, I understand, but now it's taking out daily sell side right here. That's a big level. And after we took out that daily sell side, it created a further higher time frame sell side. It created this 4-hour swing low right here immediately after taking that. It created this 4-hour swing low, and then it came down and took that as well. So you're talking about a deep discount marketplace. It left behind internal range equity in the process. I knew it's just a matter of time before this thing's going to have a very nice reversal to the upside. Now, it continued to sell off throughout London session. Like this thing just got demolished. It's just got hammered throughout London. Why did it get hammered throughout London? Because it wanted to draw to this inefficiency down here on the 4-hour. You have this imbalance down here that's serving as a draw that it wanted to draw to, that it was that magnet for price that it came down into. So, and you can see that's where it found its support at. We came down into that here into New York session. Of course, I let news and everything get done with. But it comes down to an imbalance. We get a nice little push up right here that creates that little lower time frame fair value gap right there, as you can see. And then we ended up getting the candle close a little bit later. Again, right at the buzzer beater coming into right before 11 o'clock. You see that? So at that point, I have confirmation. I have a shift in market structure here off higher time frame 4-hour support. And also another bonus here, I have this doing this off an 80 institutional price level. Major market reversals, they tend to occur around institutional price levels, those being the 0, the 50, the 0, the 20, the 50, and the 80, right? So that's where these major market reversals tend to occur at, right? So I have this shift right here, and off a higher time for 4-hour imbalance. It's already in a deep discount marketplace. It's taking out daily sell side, 4-hour sell side. It's been selling off all throughout London session. Now it's coming down to a higher time frame imbalance, 80 institutional price level, and it confirms with a market structure shift. Now, once I get that change in trend, how do I establish the draw? I look up, and this is the simplest way to establish the draw. Ask yourself, where is their stops going to be residing? Because this thing's been selling off, right? So there's going to be shorts that are in this thing that are showing their positions. Where are shorts going to be keeping their buy stops? Look up. I have really clean equal highs right here, right? That's a level of resistance. So I can anticipate that there's going to be buy stops residing above that level. Target. It's that simple. I target that because now the momentum has shifted and it's ready. It has this support. It has a reason. It has a reason to move higher now, and it attacks it. But Mike, look at all this stuff. I don't care about that. I know there's somebody looking at this, right? Because I always get that whenever I see something that rips up like this, I can just see the FOMO in people. It's like, or the greed in people when they see this thing pushing up like this. It's like, well, look how much money you left on the table, though. I don't care. It's outside my plan. I do not give a solitary shit about leaving money on the table if it's outside my plan, right? That's just purely a Heinz. Now, yes, I did figure it was going to push up some more, but I like taking low-hanging objectives. I understand it was in a deep discount, but I like low-hanging objectives. That's what fits me. That's what works for me. And anything outside the plan is noise, okay? I don't care about that. I don't care about catching the entire move, okay? That's a loser's game, trying to catch the exact top, the exact bottom. I take the meat of the move and I keep it moving. That's what made me rich. That's what got me to this point that I am now. So guess what? I'm going to keep doing it. I'm going to keep taking those singles, keep taking those low-hanging objectives. And that's what I'm going to continue to do, right? So that was the case, guys. That's what we had on it. Really nice push. And then we had USD CHF. So this thing, like, it pushed up immediately. Like right before we're coming to London session here, this thing pushed up because it had news. Like, it had high impact news right here. That's why you had such a big explosive push up. And what do we understand about high impact news? Well, a lot of times that first run that you see from news is a fake run. Not always, but a lot of times that's the case. And I had even more conviction on this thing that this was going to get clobbered right here, these lows, because it had relative equal lows down below as well. So I had that push up from news. I had these lows. I was telling my mentees all morning in the 1% club that this is going to get taken out. This is toast. It's going to have that rug pull. It's going to get taken because, again, we have that news. We have these relative equal lows. So it's just a matter of confirmation now, waiting for confirmation. So we had to push up and it kind of went into consolidation for London. So there's really nothing interesting in London session. And then we come up to New York, though. Now it's getting interesting. We come up to New York. We take out this high right here. It sweeps that buy side. Done with. And of course, I let news and everything get done with because we have news at 8:30 that takes place. So you can see we have the news, all that gets done with, and that was at 8:30. So there was really no reaction from it, as you can clearly see. Then at that point, I'm in the clear. I'm good to go. And I ended up targeting this sell side liquidity down here. See this? We have this sell side. Now think about it. Like, if you're long and you're in this play, right? You're long and you're in this play, and where's your stop going to be? Like, where's your stop going to be? If you're in this thing and it's pushing up, it's making new highs, right? Where are you going to keep your stop? Well, there's a couple areas. Of course, you got this low down here, but you have a level of support right here. So I understand there should be sell side residing there. That's what I want to target. So it comes down, it cleans it out, it breaks beneath that low, and it gives me the move. It gives me that move that I want to see. And then it comes down, and it just gets completely demolished. And it ended up giving that 15-minute shift too a little bit later, as you can see right here. See that? See how you get that fair value up in the 15-minute? You get that strong close. And then I figured it was going to take out this low as well, which I posted, well, in the mentorship chat, but also the free Discord chat. And if any of you guys want to join the free Discord chat room, I'm going to leave a link to that in the video description. 100% free, doesn't cost you a dime. All these plays are posted in there, free of charge. So that was the case, guys. We got that shift, and then it ended up going to consolidation for a bit, and then it accelerated to take out these lows, which is what we were anticipating. So I think that wraps it up, though. Hopefully you enjoyed. Hopefully you got immense value out of this, and I will catch you later.